give us some examples, good deal or a bad deal, if you don't mind.
Yeah, absolutely. Great question, Prashant. Yeah, I mean, there's just so many benefits to investing in these deals because, like you mentioned, it's very conservative. So what I tell investors is that, investing in these types of apartment buildings, it's not like investing in like a tech startup company or an app. Like I'm not going to 10x your money in a year or two, but it's also very unlikely that we lose your money because these are very conservative investments. And it's more likely we get a lower projected return than what we showed you, but still give you all the money back plus a return. You know what I mean? And when things are good, you can get a very strong return, and potentially double that money in 2 years or less. And that's what we've been seeing, with some of the investments. And so, you get the benefits of that passive cash flow distributions, which is all profits on your money, right? And so it's all passive. And then you get the benefits of any type of depreciation. Okay. And so I'll give the disclaimer, I'm not a CPA, consult your CPA, but our investors pay virtually no taxes on their monthly cash flow distributions because the depreciation of the property offsets the tax they have to pay. So even though you're getting monthly distributions every month hitting your account, you're actually not having to pay any taxes on that. So it can be very lucrative in that regard. And, you look at some of like the wealthiest families across the world for decades or centuries, they've all done this exact strategy where they're taking advantage of the tax code. This is nothing new, and it's not illegal. It's perfectly legal. There's just not a lot of education out there, and I think more and more people are now starting to understand the tax benefits of investing in real estate and the depreciation benefits that you can achieve. So you not only get the cash flow, which is passive, you get the depreciation benefits, but then you can get significant appreciation when we sell these properties and drastically grow the money. And one thing that we'd like to implement is what's called the 1031 exchange, right? And for those of the listeners who don't understand what the 1031 exchange is, this is just like an IRS tax code strategy that's been around for decades. You could use this for your own single family investment property. A lot of people do that, where you basically sell a property, you take those sales proceeds and you transfer it to a new investment property. And by doing that, you can completely defer the capital gains tax that you've paid. Okay, so you're deferring that and not paying that capital gains tax upon that sale, which just helps to grow the money even more, leverage it into more cash flow. And then that cash flow is then tax-free because of that appreciation benefit. So, this is something that we like to implement, and we're always trying to do whatever is most tax efficient for the investor.
Yeah, that is awesome, Jack. So much great information. And one thing you kind of hit was these are the tax codes. I mean, these are the tax codes written by government, by IRS. These are nothing illegal. I mean, yes, we are trying to save taxes, and saving taxes legally, basically. That's what government wants you to do. That's why they have created. These are not loopholes in any way. They say that, a poor remains poor because they spend what they earn. Middle class remains middle class because they earn and they spend and they save. Middle class remain middle class, and their saving goes to the bank account or the stock market or whatever. A rich becomes richer because they invest smart. So for us to get from middle class to a rich class, if we start saving our money smartly, you have seen it, I mean, you are the perfect example in 4 years, 3.5 years, knock on the wood, it's so encouraging to hear where you were highly paid professional, then you quit your job for and you remain, obviously there was no cash flow at that time. You were living off of your and taking all the miseries from the family and friends and in the comments and everything. So the point is, if we invest smartly, even if you are W-2 earner, we are not saying, I don't think, Jack, you are saying that you quit your W-2 job and just go to the real estate. I don't think, right?
Right. You don't have to do what I did, but you can take advantage of this by investing with people like Prashant and like us and get the benefits of this and still do your W-2 job and be passive. But like you said, grow the money by investing it wisely instead of saving it, or spending it.
Yes. So instead of saving and investing, invest wisely, even if, and invest in a conservative vehicles, like real estate, multifamily, multi-tenants, asset classes. There could be other asset classes also, but here we talk about multifamily a lot because that has grown over a period of time. So guys, I mean, basically, once again, we are talking with Jack Haptonstall. He's the CEO of Rise 48. Rise 48 has risen in last 2.5, 3 years, quite a bit. And congratulations to you, Jack, for that. And the purpose of this podcast is to motivate motivate people who are not able to take first step. Guys, folks, go to Jack's website, rise48.com, or go to myrealtygains.com, get some education, invest in some of the projects. There are tons of case study I'm sure Jack has on his podcast.